Ladies and gentlemen, we're all back again with another video. So today is what? December 19th, 2021. And Bitcoin has been doing kind of badly-ish for the last couple of months now. If you look at the actual Bitcoin price chart over the last 3 months or so, we're still higher than we were 3 months ago, but we've been in a downward trend for a little while now. So we've been mostly heading down. We've had some days that looked more like recovery days, but ultimately we have not recovered to our most recent peak of 69,000. And that may not happen for a little while. We may, once again, like I had said earlier, we may continue to go down a little bit before we go back up. People are still talking about, bullish indicators like RSI and potentially, we might go back up in the near future. This is all possible. But, in light of these types of things, two things that I wanted to emphasize in today's video. One very briefly and one in more length, and that'll be the main subject of the video. One is that, these price decreases are due to, obviously multiple factors. But what's important is that these are not necessarily because of worsenings of the fundamentals of, currencies that already have really good fundamentals. So I was about to say Bitcoin there, but I'm not just talking about Bitcoin. I'm also talking about Ethereum, Solana, any of these other projects, Cardano, that have really active developer bases, Elrond, all kinds of stuff, right? These projects that have fundamentals that are getting better over time, that are becoming stronger over time, but for whatever reason the prices aren't moving. The market is really complicated. The crypto market especially has, it's still only a $1 trillion, $2 trillion market cap, asset class. That's really small, right? So we got to keep our eyes on the fundamentals and, long term, even though there's, a downward trend for the last month or two, over the last, years, we've been going up. It's been a very, very rosy picture. And part of, the real thing with, how negative things have been in the short term recently is just that it's been going so well before that. We've really been going very, 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 very strong before that. In the year 2020 alone, Bitcoin went up, I think it was something like 345%. That's a fantastic year. 345% in 1 year, that's incredible. That's not bad at all. That's not even the fourth year of the so-called 4-year cycle, which at this point is probably lengthening. That wasn't even the most bullish year that we expected, and we still had over a 3x in a single year. That's pretty good. So you got to remember, zoom out and keep your eyes on the prize, the big picture. But today I also want to take a look at potential things that can bring the price down, that are risks to be aware of, and discuss their potential implications and effects that they may have on price, and whether they affect fundamentals and stuff like that. But these are not just market risks that I'm going to talk about. We're going to be talking about risks that range from a very personal level of risk all the way up to things that seem like borderline existential levels of risk. So not in any particular order like that, but this is going to be the range of things that we're going to be talking about in this video. And once again, I'm going to try and keep it as short as possible. Jesus Christ, this intro is a lot longer than I figured it would be. So we're going to just zip right through these, and some of these may get their own extended videos in the future. So let's talk about some of the most straightforward ones. And this is an existential risk to your personal wallet. Not for the market, but you can always mess things up for yourself. And might as well start there, right? So number one thing I want to talk about is rug pulls and overt scams, right? So this is the type of thing that is particularly common with people who invest in, exclusively who invest in altcoins, right? This is not going to happen with Bitcoin. That's not how Bitcoin works. Bitcoin is the granddaddy. Bitcoin is the one with the highest hashing power, with the biggest track record, with an active development team, the most mainstream visibility, the most adoption. It's literally legal tender in a country. Bitcoin, you're good. This is why people say, if you have, there's no other real altcoin that it would be super safe to just have only the one. unless you're basically using the altcoin market like a lottery ticket and just, you know, going hard into one thing and hoping that that makes you $1 million overnight, like those people that did the Shiba Inu thing. But Bitcoin, you can potentially have a portfolio in crypto consisting of only Bitcoin, and potentially this would be a reasonable thing to do. Now, rug pulls and overt scams, now let's start with the rug pulls, right? There are a lot of coins out there that are literally just made to take your money from you. Literally, they have a bunch of people throw in money, and they have you know, like a seed, like a main chunk of all the coins in existence that the founders have, and then all the rest of the coins you know, are opened like an ICO almost to the public, and people buy in, pump the price of the coin, and then at the very top, the founders, who have a significant chunk, whose money or whose profits are worth the most out of everybody in that coin, they just sell all their coins. The price drops through the floor, and because of the massive dumping of the coins, that project never takes off. Really, the price doesn't recover, and ultimately nobody's developing the project. Nobody's trying to gain any further traction. The celebrities that were, you know, the face of the project that told you, hey, I'm invested in this, I'm excited about this, you should invest as well. They're not invested. You know what I mean? They just said that. They're not invested. They were paid to say those things, and now they're done it as well. They probably were never even really in. So that's what a rug pull is. In general, that's roughly how that plays out. This is why you always do your own research, and don't let influencers tell you where to invest. Because right now, this is not a very well-regulated space, and they can do things that would not be tolerated in the, you know, formal securities market, right? Be careful. 2021, this is still the Wild West. Never take your mind off that. There are plenty of legitimate operations out there, but if you really start to dabble in micro caps, nano caps, it's the Wild West. You can lose all your money, and it can happen fast. And the second part of number one is going to be, you know, overt scams. If somebody tells you in the YouTube comments to send me all of your ADA, your Sol, your Bitcoin, your Ether, and I'll send you back double or triple or 10 times, and this is the opportunity of a lifetime, yeah, that's a scam. Don't ever do that. Or another thing that I commonly see in the comment sections of crypto YouTubers and stuff like that is, you know, comments that will say like just some general random crypto babble that doesn't mean much of anything. They're commenting on general philosophies of trading styles and investing and shit like that. And then they'll say like, oh, well, I turned my whatever, this amount of Bitcoin or this amount of money into this much Bitcoin or this amount of US dollars by using the trading signals of this guy. And then the reply underneath that will be, you know, like the WhatsApp number for that guy or something like that. Or another account will come in and will be seemingly unrelated. It's not unrelated. These are all bots. And they'll be like, oh, wow, that's really interesting. Can you show me his number? And they'll simulate a conversation in the replies to make it seem like this is organically happening. No, that's not organically happening. This is set up. Don't WhatsApp that number, because then they'll have your number and they'll try and contact you, and this will be a headache as well. But certainly don't give your money to anybody. If you want to double your money or 10x your money, you can do that just by holding. You don't have to trust somebody else to double your money instantaneously. They're not going to do that. That's not how this works. I get that it might seem that way because of, you know, the mentality of some people in crypto where they want to get rich overnight. Nobody is just going to give you more money instantly. That's not how this works, okay? Don't send your money to somebody impersonating some famous figure, because I promise you they are impersonating that figure, okay? So that's number one. Falling for scams, getting pulled into rug pulls. Don't do that, okay? Number two is the macroeconomic environment, and this is something that, you know, market overall. Remember that cryptocurrency is a risk-on asset, right? So that means, you know, it's the very opposite of a bond, or at least that's how people think. I mean, realistically, with the current level of inflation and the bond yield right now, bond risk is actually 100%. It is very risk-on, because any money that you put in there will depreciate against the dollar with inflation, and you will lose purchasing power. So that's actually terrible. But in terms of, you know, conceptually, it's viewed as a high risk asset. And so if we see higher levels of inflation, long term, likely still an excellent inflation hedge, right? Like Bitcoin in particular, especially. Long term, very good inflation hedge likely. But don't be surprised if there are significant dips on news of inflation, just because some people that have recently got in, who, aren't very experienced in the overall crypto space, they're liable to sell at any bad news. And they may sell their crypto first, just because they think that this is the most risky asset. So if things go badly, I don't want things in crypto, right? My stocks, my real estate, we're going to prioritize keeping that. And crypto is probably going to be the first thing they sell. There will be dips because of things like that. But the smart money, large asset managers and stuff like that, who at this point really do view Bitcoin as a serious inflation hedge, they're not the ones selling when those types of things happen, right? If you sell into a FUD dip, remember, you're selling to the rich guys, to the big guys. I'm not giving you financial advice, but just remember that the macroeconomic, picture can, right about now, especially with the way inflation is going and supply chains and stuff are going right now, can cause a lot of downside volatility to crypto. This does not mean the fundamentals have changed or that, you should get out of crypto necessarily. Up to you, but know that these types of things may happen. So these types of macroeconomic things can pose a short-term risk that can potentially affect the price significantly. It's not necessarily a small effect. We're currently in the middle of a 38.6% retracement. Yeah, it changes every minute, but about a 40% pullback. And so there's a lot of different things that went into that, but one of them is going to be the macroeconomic environment. Another one that is in the future, it's something that I'm thinking of, but we don't know when it's going to hit, how it's going to hit, and how hard it's going to hit. It is Tether, USDT. So I'm going to link some stuff in the description, a video by CoffeeZilla and an article that kind of detail this if you'd like to read further into it. But Tether is scary. Tether, let me try and put this really succinctly so we don't go too long on this video. Tether is more or less acting almost like a central bank. Okay, they are essentially just printing money, and they probably doesn't have very much backing it. And they have already been found by the New York Attorney General's office to be, they had to pay a fine. Bitfinex had to pay a fine. Tether and Bitfinex, the exchange, are owned by the exact same people, and it's really shady, the things that they've done. They've had to do an attestation, which is not nearly as good as an audit. They've had to do an attestation of, because their stablecoin is $1 pegged to the dollar with collateralization. So you need to have the equivalent amount of money to say that these dollars exist and are worth the same dollars. But you need to confirm that collateral exists, right? And so they've done things like sell Bitcoin off their Bitfinex exchange that they control into USDT and then deposit into a bank on the day of or the day before their day of their attestation. The person looks in the bank, finds a certain amount of funds, and then they have to put that back into the market because until the day before they didn't have the funds. That is some of the shadiest stuff ever. And regulators like lawmakers like Elizabeth Warren, I think she's definitely a little confused about things like DeFi, but when she talks about stable coins, if she's referring specifically to Tether, especially, I get it. She's not wrong. Somebody has to do something about this. And Tether is a real issue for cryptocurrency in general. So if you look at the daily trading volume of like Ethereum and Bitcoin on any given day, something like 2 to 3 billion daily of the trading volume, the real trading volume in these currencies is from Tether, right? People are using Tether as an intermediate very, very commonly, and this is an issue, right? That is a lot, right? That is a lot. If that gets wiped out because Tether collapsed because they were, found to be, guilty of not having enough collateral and they were forced to shut down by regulators, I mean, that could take a massive amount of liquidity off the market pretty quickly, potentially, unless they phase that out slowly. If that happens quickly, 2 to 3 billion per day would require other, other stable coins to significantly increase their market caps very quickly, and this could lead to a very scary domino effect, because things like, USDT is the next bigger stable coin that could take over, but their market cap is tens of billions lower than Tether, right? Tether is the biggest stable coin by market cap. USDC would have to almost double at this point to catch up to Tether and to accommodate for them going down. And USDC would potentially be destabilized by Tether going down. Not to mention other stable coins that potentially, like especially something like DAI. DAI is currently 60% collateralized by USDC. So all these things are just interlocking, pieces of the puzzle, dominoes. This would start to bring down large swaths of the crypto market potentially really quickly, especially if this happens quickly. We don't know when, if and when. I don't think it's an if at this point. I think it's a when. When Tether is going to be, brought to task for, just printing money that they don't actually have collateralized. This is a big issue. And I don't know that anyone can tell you when this is going to happen. I, for one, don't trade with Tether at all. USDC all the way, basically. I think, USD Terra, Binance USD, these are all potentially reasonable options. I no longer use DAI specifically because of the scenario that I just talked to you about. But yeah, Tether is an issue. Tether is an issue. That's the second one. And then, or I guess that's the third one. XRP versus SEC. Let's talk about number 4. XRP versus SEC. So this is an ongoing court case between XRP and Ripple. Ripple Labs is actually what they're suing. But they're more or less calling XRP an unregistered securities offering. These types of cases have happened in the past, typically depending on the conduct of the company in question. Like if all they did was have an ICO and they deemed it to be a security and that's all that was, it was a civil thing and there was a penalty, they paid a fine, and that was all that happened. There was another case in the past where, this happened, but they also were kind of lying to investors in some ways, in which case they were actually forced to, sell all their remaining assets, promise not to do anything in that space ever again, really undo everything. It was more than just a fine. They had to shut down. Now, XRP versus SEC is interesting because it really does have potential implications depending on how it goes for other altcoins, right? I think so far the SEC has mainly said that Ethereum and Bitcoin are the ones that they wouldn't go after. But actually right now, I believe the SEC kind of is saying that, that statement that was made by a previous then chairman of the SEC or something like that, I forget his name, that isn't an official position of the SEC, and that maybe they will go after Bitcoin and Ethereum. They haven't said that officially. And so I think Ripple was trying to make the argument of like, well, how is this any different? And in order to combat that argument, SEC was saying, well, we don't necessarily stand by what he said about Bitcoin and Ethereum essentially being safe from regulatory pressure from the SEC. We'll have to see. The way this court case goes could potentially have some serious knock-on effects for a lot of altcoins and stuff like that. Ultimately, especially for Ethereum and Bitcoin, I think there's a reason he said that there wouldn't be, effects on Ethereum and Bitcoin, mainly because they're so decentralized, it would be hard for them to enforce anything on Ethereum and Bitcoin. So it would be impractical, and probably even trying would make people lose respect for the power of the SEC because they would likely be, ultimately unsuccessful. And it would be it'd be very difficult for them to maintain any power or semblance of authority if they tried to go after Ethereum and Bitcoin. It's just too decentralized. Now, if that decentralization criteria really comes to something in this trial, then we can start applying this kind of logic to other altcoins and seeing, well, is there going to be more regulatory pressure on something like, say, Solana, right? Solana, which is much more centralized than Ethereum or Bitcoin. What is this going to do to them? So we'll see. So this is a potentially significant risk. I wouldn't say an existential risk to the altcoin market, really. But there could be a significant dip that happens if if Ripple Labs loses to the SEC, and there may be some knock-on effects. But on the other side of this, if Ripple Labs wins this could be actually really good for regulatory concerns for a lot of different coins. But the SEC has a lot riding, like its reputation. The SEC going into this, everybody just assumed that the SEC was going to win. Now that's looking slightly less certain. So if it goes the other way, there could be some positive effects for cryptocurrencies as well. So we'll have to keep an eye on that space. Then there's the more recent Infrastructure Investment and Jobs Act, which was signed into law by President Biden, which has some really iffy things in there. So this is probably the one that you've heard of, more likely than not, where they define broker very broadly as pretty much anyone that's making transactions, really. Even validators and stuff like that could potentially be defined as a broker and subject to certain KYC requirements that they may literally be unable to fulfill. And therefore certain, large, just categories of people that are involved in the world of crypto could potentially be significantly penalized just for doing what they were already doing because they can't provide KYC. There might not be, the availability of KYC in certain cases because this could potentially qualify all of us as brokers, and all of us need KYC for all of our transactions. Like the way they've worded it, the way they've defined what a broker is in this act is just way too broad. It's way too broad. And it's weird that they passed it in like an unmodified form. I think for a while everybody just assumed that there was going to be a modification before the final thing passed. And so this is something that was brought up in the recent congressional hearings where all the CEOs and stuff went to talk to Congress about regulation in crypto and what's going on, what should go on going forward. This is one that could actually really be an issue, especially if you're an American crypto investor. If you're out in the United States, this is not really necessarily as relevant to you, but still potentially relevant to you because America is a really big market. A lot of money comes from this country. And so it may not directly affect you, but it may affect you indirectly by affecting the prices of your favorite cryptos as people start to get out because the government has, more or less regulated us out of the market, which would really suck. Now, you could still remain long-term bullish. Any one country, even America, getting out of the crypto game in this way is still something Bitcoin can recover from. Ethereum can recover from. Smaller altcoins, maybe not. Especially if they're very much America-centered. But, it's something to watch out for. It's another risk that you got to be mindful of because it's basically not even a risk. It's become real now. And the magnitude of the impact that it has is really just what we're looking for. And hopefully there's some solution, some remedy that people come up with. But, we were kind of hoping that would have happened already. And it's more than halfway through December. So it's like, what the heck is going on? So we'll have to see. Another one that I've talked about a couple times at this point is exchange hacks. And then, of course, we'll group this together with protocol attacks, just because of recently what's happened with Solana. So exchanges are not really the most secure way to store your crypto, right? You buy your crypto on the exchange, but you should be storing it on like a hot wallet, or even better, especially if you have a lot of money in crypto, in a cold wallet. See my ledger review and comparison to Trezor and all that stuff in the top right. But exchanges get hacked. In 2019, there were 19, right? In 2020, there were multiple. In 2021, there have been, I want to say 3 or 4 in just the last 4 weeks. We're seeing tens to hundreds of millions of dollars stolen through exchange hacks. And sometimes these exchanges have reserve money anticipating that something like this might happen, and they pay you back. Bitmart did that. They have a reserve. They were going to try and reimburse everybody. But this is not guaranteed, and ultimately if more money is stolen than they have to reimburse you, you may have just lost all your money. All your crypto assets anyway. And that sucks. Now, these things have tended recently, especially, to have less of an impact than they would have, say, 7 years ago. But especially when multiple of them happen, it is something to be aware of, right? It is really something to be aware of. Exchange hacks, if too many of them happen with too large of an amount, you know, this affects the overall narrative of crypto. And my crypto narrative analysis top right. But this is potentially an issue, especially if too much money is taken at once from too big of exchanges in rapid succession. You know, this can adjust the way people view the market, especially if there's a lot of new people getting into crypto. And if one of their first experiences in crypto is getting their money taken because the exchange got hacked and they didn't know to move it off, I mean, that would suck. You know, that would be a setback. This has happened in the past though, and it's not a permanent setback. We've always recovered. Exchange hacks are just bumps in the road, but they can be significant bumps in the road. Remember, previous long bear markets and crypto winters have been, you know, triggered by hacks, especially in the early 2013, 2012 era. So my video on crypto winters and bear markets, top right. So then the other part of this would be protocol attacks. So things like, you know, the DDoS attacks on Solana, and then obviously there was 51% attacks on Ethereum Classic, if you follow that at all. Protocols can be attacked, especially, you know, more centralized ones, and ones that can't handle, you know, heavy DDoS attacks and stuff like that. There's a lot of different types of attacks. You can see my initial blockchain and cryptocurrency video detailing some of the potential types of attacks. But these types of things are more blockchain specific, right? This is typically not attacking like an exchange that has multiple coins. It's trying to stress and potentially steal from holders of a particular coin. And so that's more something you can hedge and look at based on just fundamental analysis to see how secure a particular chain is. And, you know, it typically helps to have a more decentralized chain. It's harder to attack something as huge as Bitcoin, right? Huge Bitcoin proof of work. 51% attack at this point on Bitcoin is essentially impossible. Same thing with Ethereum. Not impossible, but like unreasonably difficult. So you'd have to be like a state actor like China that really put a lot of money that you're willing to waste into, you know, throwing a big blockchain out of order. So protocol attacks, especially for altcoins, can be a big detriment to their price. But it really depends on how severe that protocol attack is. So that's another risk to be aware of, something to look into when you're doing your fundamental analysis, preferably before you buy in, right? And the final thing I'm going to talk about is personal mismanagement due to volatility causing stress. This is more or less the kind of thing where you sell at the bottom. Now, don't get me wrong. If fundamentals are changed on an altcoin, where it really looks like it's going down for a good reason and something really has changed on a fundamental level, you don't want to diamond hands that, right? You're just going to be, you know, catching a falling knife. You don't want to do that. But remember, if there are big drops because of, you know, downside volatility that have nothing to do with fundamental value, it doesn't necessarily make sense to sell in those scenarios. Again, not financial advice, it's up to you, but this is often how people lose money. You know, they see this massive amount of volatility. They may not be prepared for the sheer magnitude of the volatility, and then they sell when things are low, right? And that means they lost money. You can easily lose money simply by realizing unrealized gains that it may not make sense to, you know, to realize. And so that's, once again, a matter of fundamental analysis and seeing what's changed, whether those changes are going to be permanent or not, whether you're still long-term bullish on a project. And if none of these things have changed, no matter how dire it seems, it probably doesn't necessarily make sense to sell. So it really depends. You got to take a hard look at these things before you sell, because selling at the bottom is not what you want to do, right? And the best way I found to avoid this type of thing is the same thing you do in the stock market, right? If you really believe in the fundamentals of the project and those fundamentals are unchanged, then you are going to be able to more easily see price drops as discounts, which they should be, right? If the fundamentals and the dev team are rock solid, they're still working towards their goal, they're still making progress, they have a clear roadmap, and they're having adoption milestones that they're meeting and stuff like that, then you're set, right? There's gonna be pullbacks. This is crypto. It's gonna happen. But you gotta kind of train yourself to look for the dips that are, relevant, right? But because when Bitcoin dips, it's typically a discount. That's something I'm typically happy about. You don't sell your Bitcoin when it goes down, you buy more. So that's the last thing. Next time, I think we'll talk about ways people lose their crypto and how you could potentially avoid that. So thank you for watching all the way to the end if you made it this far. Comment down below if you think there are any other significant risks to the market that we should be keeping track of. And don't forget to like and subscribe. Thanks for watching.